I am Tom Farmer, owner and managing director of Freelance Total Rewards, a gig economy alternative to the big HR firms. I've been consulting for roughly 20 years. I was a top consultant at Hewitt many years ago. It's part of Aon. And I was with Mercer for a couple of years where my revenue was tops in a group of 300 people. And I've been running my own consulting firm in the area of total rewards and comp and benefits for the last 12 years. This is on top of 20 plus years of corporate comp and benefits experience, mostly in managerial roles. I want to share with you now that I consult for many years now um, the thought process. Every consulting firm has a model, has a diagram. Uh, it's a little dangerous to make a model because something's going to be off, something's left out, something is assumed. But let me just walk you through this and see if it makes sense. And I invite my consulting friends at the big firms to enjoy this and perhaps test their own approach against mine. And feel free to steal ideas. If you really steal a good idea, please cite the source. So, how do you consult? To me, any client engagement that has an issue around rewards is worth doing right because one, you're talking about the biggest expense in the organization. Two, you're talking about an area of management that directly affects people's lives. It affects their income and their work experience. And so, and third, I love my work and I always do every project to be my best ever. Okay, so I want to walk you through this, and I take this whole mental framework to every project, even if only a piece of this is in scope. Why? Because a client will say, hey, we need to do benchmarking, but their job architecture might be messed up. They may have people in two levels of engineer, but in that second level, you've got people who are still doing simple jobs, but got promoted based on seniority. And you may have people making twice as much money because they just don't have a third level, but they keep giving pay increases. So if they just want to do benchmarking, we can't even assume that the job levels they have and the placement of people into job levels is correct. So we really have to check everything, take a look at everything, ask a lot of questions. And so this model, think of it as like a dynamic connected checklist um, for doing this type of work here. So I'm going to use the online cursor here to walk you through it. And I'm going to sort of work from upper right, going leftward, and then down, and then to the right. Okay, so yeah, upper right to the left and then down and then over to the right. I'm going to zoom in actually here. So I start in the upper left. Tell me, what is the business? Who owns the business and why? Is it government linked? Is it government subsidized? Is it a nonprofit supported by donors? Or is it private sector, basically? And if it is private sector, is it family owned, small business, or is it sort of shareholder, publicly listed, et cetera? These all have implications for accountabilities and therefore rewards. Who owns the business and why? What do they produce? Goods, services? Are they segmented into product groups? Are they organized geographically? And so on. Who buys it? Tell me about the customer. Do you have B2B, B2C, or in the case of government linked, is it G2C or G2B? So there's a lot of assumptions we should not make about an organization's product and who their customer is. And maybe for one customer, they sell certain low margin products. And then for other customers, they sell high margin products or services. So it's really important to understand how they make their money. If they're in a low margin business, don't come in with expensive solutions about paying people more so they'll be more engaged and easier to attract and retain because you're cutting away at thin margins. you have to think more creatively, maybe more on the intangible side of total rewards. So we have to understand what is their business model, where do they make their money, what do they do for loss leaders, market presence, this type of a thing. What is sort of core bread and butter business versus opportunistic business, and so on. Obviously, you need to know where they're located, where their people are located, what markets they serve, what segments they serve, because you may need multiple pay systems and pay philosophies. You may need different market positioning, okay, for the different segments and so on. You need to understand the competitive environment. Who is their competitor? In the case of a government or a government agency, Ministry of ABC, there is no competition. There is only one. And so this might not be so relevant. However, they may want to benchmark themselves against their counterparts in other countries. Most cases, a private sector business has competitors. They know who they are. If you're benchmarking, don't just benchmark against the direct competitors. Benchmark against organizations you hire from and lose to, which could be other sectors, other industries. Okay. Culture and values, very important. I didn't put this low on the list based on importance, but when it comes to rewards, you have to start with the business model and you cannot skip how they make money, where they make money, who the customers are. Often in HR, we think all we have to do is talk about culture and values and people and that type of thing. That's fine. That's perfectly fine. To me, the relevant elements of culture and values has to do with, is it a paternalistic adult-child culture where the company promises lifelong employment, an annual raise, a bonus every year, and to keep you whole with inflation, and you get a defined benefit pension. Okay. When you retire, you'll get 70% of your final income for the rest of your life. That flows from a paternalistic philosophy. I contrast that with a shared responsibility philosophy, which is between adults. It's like adult. All right. Defined contribution. Okay. I'm not going to promise what your retirement benefit's going to look like, but here's how much we can afford each month to contribute. So that's defined contribution in retirement terms. But the same mentality applies to other things, such as health insurance. What's covered? What's not? Is everything A through Z covered, no matter what it costs? That's defined benefit mentality. Whereas if the company says we have $5,000 a year per employee, that's defined contribution philosophy. So I try to cull out and draw out through interviews what is their culture and value system. Other element dimensions of culture could be team versus individual emphasis. Um, yeah, things like that. Okay, life cycle stage. Is it a startup? If so, cash is tight. They're probably using ESOPs and excitement and job titles and maybe agile work environment. If it is a growth phase, you've got to attract and retain talent, and money's a big part of that. You can't be cheap about it. When you are mature, it's all about earnings, profit margins. Okay, it's about cost control. So EBITDA becomes the normal metric, mature companies, life cycle wise. Okay, so those are the big sort of big picture questions. I then move on to how you organize work, how you value people, how you measure these things, how you reward people. So looking at current practices in HR, basically. Now, these are related to everything from business metrics, balanced scorecard or dashboards, economic value added, these kinds of performance management systems at the top level, board level. These influence how KPIs cascade down from the top. These influence how objectives and key results get set. If you're into OKRs, ultimately, these should be component of performance management. You don't want to rate somebody high who is not contributing to these business metrics. You also don't want to rate somebody low for having a messy desk or coming in late once in a while if they are clearly contributing directly to enhancing KPI achievement or other metrics. And this can include employee engagement or other things. Okay, so we want to make sure these things are aligned and flow sort of from the culture and business goals. We have to get down also down to the work people do. You cannot think that compensation is just numbers. It ultimately is about numbers because we're talking about compensation, dollars, salaries, bonuses, allowances, stock recognition, things that are generally quantifiable. But you can't really do this unless you understand the words. We start with words before we get to numbers. What are the words I'm talking about? The words I'm talking about are job descriptions, okay? Annual report, website, understanding the company, and in between these, we have the org chart. Now, it would have titles, departments, names, things like that. It's not just the words on the org chart, but the lines, the solid lines, the dotted lines, who reports to who, because somebody would not normally be paid the same as their boss, have the same pay grade as their boss, have the same bonus as their boss, or the same title level as their boss. So we look for a certain hierarchy because, in fact, businesses need certain control over their business to ensure quality and value is delivered to their customers consistently. All right. The perfectly flat organization does not exist. Ultimately, somebody hired you, they can fire you. So we need org charts to see who reports into who, where the accountabilities are, how narrow the functional domains are for defining jobs and for benchmarking purposes. Some jobs are designed very narrowly, like a silo. Other jobs are designed with more breadth. Okay. And not just at management levels, but even for individual contributors. So org charts are really important if you're going to do comp work. You've got to know how to understand what you see directly on an org chart, but also you need to understand the implications of what you're looking at on the likely behaviors, decision-making patterns, collaboration patterns, incentive alignment, and things like that. All right. So these are the sort of HR type of stuff that we do. All right. So we've got the blue stuff done. Next, we have some external influences on things. So up in the upper left, we've got location and culture for your current and future workforce, what they need, they value, what they prefer. So you need to understand sort of the different locations you work in. This could include remote workers also. This could include cross-border mobility, global mobility. This would include geographic culture. So for example, let's say you're a Silicon Valley tech firm with a very flat individual-oriented culture and you have an office in China. So what's going to determine how pay decisions get made and how promotions get made and how innovation happens? Is it your company's culture that everyone's idea is equally valuable, or is it the local culture in China that says the big boss's idea is the starting point, and then all ideas presented following must align with the big boss's idea? Okay, that would never happen in Silicon Valley. So, which culture prevails? Because there are some elements and design elements in rewards that will fit or will not fit depending on the local culture. Okay, not talking about company culture here. I'm talking about the local culture. Okay, you also have to understand the needs, values, and preferences of your workforce. And this includes your current workforce because you have to retain them. And it includes your future workforce because you have to attract them. All right. So whose needs and preferences matter? Not only the people you have, but the people you will have. You have to attract. So you have to really understand these things. Just a quick bit of advice. Forget what year people were born. It doesn't matter whether you're Gen, baby boomer, X, Y, Z, millennial, alpha, whatever. Those labels, don't mean much when those people 10 years from now, when they're not in that category anymore, or when there's a younger category. The things you said about millennials when they were in their 20s are no longer true about millennials because now they have families, they appreciate health insurance, and they appreciate retirement benefits. They didn't 15 years ago. Okay. So forget the labels, focus on life stage, age, single or married, families, healthy, not so healthy. These drive attitudes relevant to benefits, especially, but also compensation. How other employers value and reward work, um, how they reward and value people, and impact. Okay, how do you value work? As job evaluation. How do they reward work? Base pay, incentives, recognition. There's a whole toolkit there. Long-term, short-term incentives, team incentives, individual incentives, you name it. How do they value people? Well, everybody is equally valued, and we just want to make everybody happy. Okay, well, is that true between top performers and marginal or weak performers? Do you really want to make everybody happy? Would it be good for the business to have a little healthy turnover so that mediocre performers don't hang around because you pay them like they're superstars? Okay, so we want to understand how we break down people, what work is, how we evaluate work. Do we have level guides? Do we have job evaluation? Are you using Hay, Mercer, Towers systems? Are you making a custom system? Uh, and are you just looking at performance ratings, or are you thinking about impact or contribution? Impact and contribution point to an individual's impact on the whole company, or contribution to the organization's entire success, not just did I do my job? Did I deliver my KPIs? That's me focused, not impact on the company. Okay, more and more organizations are getting smart and using the term impact or contribution in place of performance. Finally, legal and regulatory environment, both business legal and regulatory environment as well as HR. It is not enough for an HR professional to say, I know the employment laws in my country. All right. That might get you certifications that are approved by the government, but that doesn't make you effective in managing rewards. In fact, that's just table stakes. It's assumed that you know the laws and regulations. It's a shame that you can get certified on an exam that is primarily about understanding the legal requirements in your country. The art and craft of doing rewards, just like HR in general, is about principles. Understanding psychology, understanding business and operation, understanding value creation, value measurement. And did I mention psychology? Yeah, it's a real application of psychology. It is not mainly about regulatory compliance, but we do have to comply with the laws and regulations. So yeah, I put it in here. Okay, so that gets us down to the bottom. And this is where the consultant comes in, and before we work on anything, we try to understand these things. We need to understand the top half of this diagram before we can develop something that's going to work, that's going to fit, that's going to give you the edge in attracting and retaining talent. It's going to actually move the needle on behavior change, on effort, and hopefully results. Okay. Results is not completely guaranteed by getting the behaviors you want because sometimes a tornado wipes out your warehouse. Okay, so when everybody behaves and gives their best effort, it's not a guarantee of success, but it helps. All right. So what's on the bottom level here? Basically, we employ knowledge of the above, and then we apply total rewards principles. For example, the total rewards approach, which is looking at the entire package, both tangible and intangible rewards. For example, you can retain good talent by developing them. It may cost money, and they may take that training and leave. But if you don't develop them, almost for sure they're going to leave. Okay? So the best way to lose a high potential is to not challenge them, not stretch them, not grow them. So that is not about compensation, but it is about total rewards. Data and tools. All right. We use data, employee data, market data. We use job evaluation systems. We measure work. We convert that to points and scores and grades. And then lots of tools, not just Excel. I'm talking online job evaluation tools. I'm talking about job architecture tools. Excel can do some really cool stuff with job architecture, validation grids and spark lines and salary variance charts and other things that are indicators of necessary changes to your job architecture. And then finally, I just mentioned craft here. Some people call it the art and science of doing total rewards. Fair enough, that's a good term. I like to use the word craft because I think a person evolves and grows and learns. It's not like I go to a class and I know it, but you have to apply things and see with your own eyes, do they work or not? You just learn through experience. But yeah, that's the craft. It's the practice. That's why consulting firms can be called a consulting practice. We're always practicing, learning, honing our skills, and honing our craft. We collaborate with HR. We don't just do the work at our desk, send it over, and send the invoice. We work very closely with client HR, always. So what we deliver is, all these things here: job architecture, pay structures, pay tools, um, merit process, promotion process. We don't just do a one-time thing, but we will advise or even build out the tools and procedures for the annual salary review. All right, this is how we keep pay competitive, and it's how we help reward and retain certain people more than others. Okay, reward, yeah, kinda. Retain, definitely. Base pay has the effect of retaining those who end up being paid well. It's not the percentage, although that can upset somebody who expected a higher percentage. It's less about the percentage, it's more about how high they're being paid. Giving somebody who's paid really low a 7% increase, which is a nice number, isn't going to retain them if they're still low, if they're still well below the midpoint and they're a top performer. Base pay will retain really effectively if they're paid high in the range and you have not neglected things like work-life recognition, development opportunity, everyday respect, empowerment, challenge, things like that. Okay, you can't neglect those things. Money alone doesn't do it. But yeah, merit process is really important. Promotion process, really important. These two, by the way, your CEO thinks about, your CFO thinks about these things. Okay, why? Because these directly impact your biggest expense, which is compensation. You get the merit process working well, you get promotion process working well, all right, you will be appreciated by the CEO and the CFO, okay? Because you're really directly helping manage the biggest cost of the organization. We also look at pay linkages, obviously pay and performance, but we look at base pay, the merit pay system, variable pay, which is incentives, long-term incentives, short-term incentives, whether it's cash-based, whether it's paid immediately or deferred, equity-based, team versus individual. There's a lot of there are a lot of dimensions to incentive design and pay mix and a lot of principles involved here. So pay linkages and design is really very intense work. We also look for insight by doing various analysis. We look to align things. We are like an orthodontist looking for crooked teeth and trying to get things straightened out. Uh, we can recommend policies or recommend removal of certain policies like perfect attendance bonus. Okay, operations loves it because they hate scrambling to replace somebody who didn't show up at work today at a coffee shop staffed by 3 people. If one of them doesn't show up, it's only 2 people. What if it's a coffee shop staffed by 2 people? and one of them doesn't show up. Okay. So operations wants to have a perfect attendance bonus. So you're rewarding your people to come to work with COVID. You're rewarding people to come to work when they're sick. Okay. All right. Do you realize what you're doing? Okay. So let's be smart about policies. Are they right? And let's not be backed into doing policies just because it makes people happy. Think about the business from every possible angle. We also help our clients with implementation. Anytime we do salary ranges, there's some people who are over the maximum or close to the maximum. Oh no, what do we do? Well, the manager needs to understand this pay structure and be able to communicate that the person is really paid well already. And if they want more money, I'd be happy to pay you more. It's hard, however, to justify more money in your current role. So let's focus on your development plan in case something opens up at a higher level. All right, you turn a pay discussion into a development discussion. So we talk about implementation of pay structures, people who are in the wrong grade, wrong title, over the max, under the minimum, whatever it is. Okay, I've seen that in corporate experience, and it's nothing new, really. It's nothing new, but it's terrifying to HR people who maybe have not had to personally deal with it. Okay, beyond the direct pay system tools and solutions, we also support our clients with CEO and board engagement. I love talking to a CEO. My associates are quite good at talking to CEOs and communication strategies, transparency issues, and also HR capability building and manager capability building. These are all essential. A perfectly designed pay solution, pay structure, incentive plan, whatever, they can fail if managers don't do their part. So it's really important to train your managers. Okay, so that's about it. And I hope this was useful. It was just an attempt to kind of put my consulting framework out there. It's my first attempt to put it on a single slide. I hope you find it helpful.